Could you give us a brief overview on your style of trading?
Yeah, it's changed over the years, and I think that as all traders, you have to evolve because the markets evolve and the market's cycles are always changing. So one thing you can't do is just be blinkered and just say, I'm going to trade with this strategy and I'm always going to trade with that strategy, because strategies die. They don't last forever. If it was that simple, then we'd all be billionaires 18 years ago and just have one strategy and just use that. So you have to evolve, but certainly one of the biggest ways that I approach the markets is to use a top-down approach. Much like when I used to work for a fund management company and the fund managers would always use a top-down approach. Same thing for trading, in that I use the higher time frames to make my decisions or help with my decisions, and I use the smaller time frames for execution. So if I'm looking at a daily or weekly chart and I see a certain trend on the daily or weekly chart, then I'll be drilling down to maybe a 4-hour chart or an hourly chart for an actual entry, but it's based on the higher time frames. So multiple time frame analysis, I would say, is the number one factor in my trading.
What would you say is your favourite kind of setup?
Oh, there's so many, but I do quite like a setup whereby you get price action starts to move strongly initially in a new trend. Maybe it's come off a base, and so it's the market's sort of bottomed out, and it's looking like it's starting a new trend. I do quite like that. So the new trend starts, and then I'll be looking for a pullback after that first move. And to then, let's say if it's a long, then I'll be looking for a pullback to get long. So I do quite like a strong impulsive move and then a pullback to then get long. Very simple, my methods. I have a number of methods, but they're all quite straightforward and simple. I'm sure we'll talk about that at some point. But it's all about the price action and time frame analysis. And if it all lines up, then I'll be looking for price action to move in a certain direction, then just a pullback to try and get a better price, and then jump on board that move.
Would you define yourself as a trader or an investor?
I'd definitely say I'm a trader rather than an investor. It's not, investing is something you do for the long term. I have money in long-term funds and the likes, but on a day-to-day, week-to-week, month-to-month basis, I'm an out-and-out trader.
So what kind of trader are you?
Well, it's interesting. If you'd have asked me 10 years ago, then I would have said I'm pretty much an out-and-out day trader back then with a little bit of swing trading. Now, I'm probably more 50-50 day trading and swing trading, because my life has got busier. And so I don't always have as much time, and not every single day, to be in front of my screens all the time. And actually, as I'm getting older, I don't want to be in front of my screens all the time. We're in the summer now, although we don't really believe it. Quite often I like going out water skiing in the mornings. And if you're going out water skiing, you can't be in front of your screens. So I want to have that flexibility within my trading so that I can do other things when I want to do them. And being able to swing trade enables you to do that. So I'm not glued to the screens all of the time anymore. More so in the winter, when it's dark and horrible out there, then I'm quite happy being in front of my screens, finding a few more opportunities here and there. But swing trading does compensate in that you don't have to be there all of the time. You can get on and have a life and do other things and still be a trader.
Do you prefer discretionary trading or mechanical trading?
Discretionary, yeah. Mechanical trading is great. A lot of newer traders especially, they want something called certainty in the markets. They want to be certain that they're going to be right 70% of the time, and out of every 10 trades, 7 will be right, 3 will be wrong. We can throw that out of the window, because that's not the way the markets work. So you could have a 70% success rate, but you're not going to have 7 out of 10. You could have 3 out of 10 in any one block of 10 trades that could only be right. But that's what a lot of traders want. They want this certainty. And so they look for a mechanical approach. A plus B plus C equals D, or whatever. I don't like following that approach because I think it's too linear. You have to be able to take in a much more information in order to trade. And that's why I use a top-down approach. That's why I use multiple time frame analysis. Because if all I had was my blinkers on, was looking at a 5-minute chart saying, oh, well, there's a nice little pattern there, I'm going to trade that, but I haven't realized that on the hourly time frame it's going completely against the trend, well, that pattern's probably going to fail. So what I like to do is have mechanical setups that I'll look at, but I apply them in the context of what's going on in the greater trend.
Do you prefer short-term trades or holding long-term trades?
Years ago, I would have probably said short-term trades. It's amazing how you change. These days, I would say that longer-term trades I actually enjoy more because they both have their own challenges. A short-term trade, you're watching the markets live as it's moving around, and so that presents its own challenge in that you have to have the discipline not to tinker with your trade too much, run it to the targets that you have. Every movement, some traders, oh no, it's coming back against me, or should I come out, and all of that. You have to have that discipline to stay in on the trade. But that discipline may only last for half an hour or 2 hours. When you're in a longer term trade, you've got to have the discipline to stay in that trade for weeks potentially, and keep reminding yourself of why you've got into that trade in the first place and why you need to carry on running it to a particular target, or if you're trading your stops, then letting those stops trail you out. So I find that the longer time frame trades more interesting nowadays. The reason being is I just make more money from them. Simple as that. You can make more money holding onto a trade for several weeks because the markets are more likely going to run a lot more over several weeks than they are over half an hour, whatever. I can't get that excited. Don't get me wrong, it's my bread and butter. You know, these little trades on an intraday basis, they are my bread and butter, but the cream comes from the swing trades.